Hello, I'm Dr. Sonal Babbar, an Associate Professor, Department of Commerce, Maitrey College, University of Delhi. In the previous video, we saw the computation to be done for a let-out house property. In the upcoming video, we will see the computation to be done for a self-occupied house property. Through this video, we are going to learn how to do the computation of income where the house property is self-occupied. So if the house property is self-occupied for own business or profession, as we have learned in the previous videos that such house property is not chargeable to tax under the head income from house property. Where a house property is self-occupied for commercial purposes, meaning thereby the house property is used for carrying on the business or profession of the assessee, then its annual value is not chargeable to tax under the head income from house property. And house property which is occupied for own residential purposes, there we compute the income from self-occupied house property and the annual value will be chargeable there. If more than 2 house properties are self-occupied for residential purposes, then only 2 houses as per the choice of the assessee will be considered as self-occupied and remaining will be taken as let out. Taxable income will be computed in the same manner as in the case of let-out house properties for the deemed to be let-out properties. And assessee can choose different houses for different previous years, which will reduce his overall tax liability. So, if a house property is self-occupied, then an assessee may own 1 house property or could have 2 house properties or more than 2 house properties. Let us say 3 house properties in this case. So if there is 1 house property, this will be taken as self-occupied for residential purposes and NAV will be nil. Where 2 house properties are there, both house properties will be taken as self-occupied for residential purposes and NAV for the 2 house properties would be nil. And where there are 3 house properties, out of this, only 2 house properties will be taken as self-occupied for residential purposes and remaining, that is 1 house property here, remaining 1 house property will be taken as deemed to be let out and all the taxable provisions which are applicable to a let out property will be applicable here. So we look at case number 1 where the house property is occupied throughout the previous year for own residential purposes. That means the assessee occupies the property for self-residence. It is neither let out nor put to any other use. As per section 23 subsection 2, the annual value for house property which is used for self-residence by the owner throughout the previous year is nil. So here, if the house property is occupied throughout the previous year for self-residential purposes of the owner, then net annual value will be taken as 0. For example, Chirag has purchased a house in 2009 and the house is located in Mumbai. Since then, he has been living in that house with his family members and that house is being used for their residence purposes. It is self-occupied by the owner, therefore, the NAV for such property will be taken as nil. The annual value will be taken as nil because the house property is self-occupied for residential purposes by the owner. Income from a self-occupied house property during previous year 2021 is to be determined in the following manner. Gross annual value will be nil. Municipal taxes which are paid by the owner during the relevant previous year, no deduction is available, therefore it is also nil. Net annual value is nil. As we stated, as per section 23 subsection 2, the annual value of a house property which is used for self-residence by the owner throughout the previous year is nil. By that we mean NAV is nil. So as a result, the upper 2 values also go nil. When we come to deductions under section 24, the statutory deduction or the standard deduction we know is 30% of NAV. Since NAV is nil, the 30% of NAV is also nil. Only deduction allowed here is on account of interest on borrowed capital. And interest on borrowed capital is deductible, but it is subject to a maximum ceiling, and the deduction of rupees 30,000 or 2 lakh, as the case may be, would be applicable here. The difference between NAV and the interest on borrowed capital will give us income from house property, from a self-occupied property. Talking about section 24B, which is interest on borrowed capital, as we know that the interest on borrowed capital is allowed as deduction on accrual basis. However, in case of self-occupied property, we see that the ceiling has been put beyond which the interest on borrowed capital is not allowed. When we say interest, it includes the current year interest and the pre-construction period interest. These provisions are applicable based on the assumption that the assessee does not opt for the new tax regime under section 115 BAC. As we learnt in the case of let-out properties, that interest on borrowed capital is deductible there without any maximum ceiling. On contrary, for a property which is self-occupied for residential purposes, the interest on borrowed capital is deductible, however, with a maximum ceiling put on it. Interest up to rupees 2 lakh is deductible for 2 self-occupied properties, provided the following conditions are satisfied. Condition 1, that the capital is borrowed on or after April 1, 1999. Condition 2, that the capital is borrowed for the purposes of acquiring or constructing a property. So if the capital is borrowed for repair of the house or renewal of the house, then higher limit of 2 lakh is not available. So it is available only when the purposes of acquiring or constructing a property is there. Third, the acquisition or construction should be completed within 5 years from the end of the financial year in which the capital was borrowed. So if the capital was borrowed on 1st June 2014, then end of the financial year is 31st March 2015, and the construction should be completed from the date 31st March 2015 within 5 years from such date. Condition number 4. The person extending the loan certifies that such interest is payable in respect of the amount advanced for acquisition or construction of the house, or as refinance of the principal amount outstanding under an earlier loan taken for such acquisition or construction. So we need a certificate from the lender. In other cases, the interest up to rupees 30,000 for 2 self-occupied properties is deductible. That means the higher limit of 2 lakh is deductible if these 4 conditions simultaneously satisfied. If any condition is not satisfied, then the lower limit of 30,000 will be applicable there. For example, if capital is borrowed before 1st April 1999, it could be borrowed for purchase, construction, reconstruction, repairs, or renewals of a house property. The limit of 30,000 will be applicable. If capital is borrowed on or after April 1, 1999, and it has been borrowed for reconstruction, repairs, or renewals, had it been borrowed for purchase or construction, then we could have seen that 2 lakh limit, provided other conditions satisfied. If capital is borrowed on or after April 1, 1999, but construction is not completed within 5 years from the end of the financial year in which capital was borrowed. So again, this is an important condition. In simple words, if any condition of the 4 conditions mentioned here is violated, then we come down to a lower limit of 30,000 rupees. Let us look at an example here. Tarun owns a house property in Delhi. During the previous year, 2021, he and his family stay in that house. That means the owner is utilizing or is using the house property for self-residence. So the property is self-occupied for residential purposes. So if it is self-occupied for residential purposes, that comes under IFHB. Municipal value of the property is given, which is 12 lakh. Standard rent is 11,80,000 and the fair rent is 12,20,000. During the year, Tarun has undertaken certain expenses in respect of that property, such as repairs, 1,35,000, municipal taxes which have been paid by him, 23,000, interest and capital borrowed for construction of the property, 1,55,000. The capital was borrowed on 12th February 2009. The loan is still outstanding. Construction was completed in the year 2011-12. Also, the lender certifies such amount of interest. What is his income from house property for the assessment year 2021, assuming that the assessee does not opt for new tax regime under section 115 back? Let us do the calculation. We know when the house is self-occupied for residential purposes by the owner, then NAV is nil. As a result, GAV will be nil and also municipal taxes will be nil. Although municipal taxes have been paid by him, which is amounting rupees 23,000 given here in the question, but we are not going to give any deduction for that. So NAV is nil, GAV nil, municipal taxes nil. And after that, we provide for deductions under section 24. 24A, standard deduction at the rate 30% of NAV. Since NAV is nil, so standard deduction is also nil. 30% of NAV is 0. Deduction under section 24B, interest on borrowed capital, but with a maximum ceiling. Now, this maximum ceiling applicable is 2 lakh here or 30,000 here. Let's go back to the conditions. It says capital must be borrowed on or after April 1, 1999. Yes, the capital is borrowed after April 1, 1999. The capital was borrowed on 12th February 2009. Second, the loan or the capital must have been borrowed for acquisition or construction of the property. So it says interest on capital borrowed for construction of the property. Condition number 2 also satisfied. Third, it says that the construction of the property must be completed from the end of the financial year in which the loan was borrowed, within 5 years from the end of the financial year. So the capital was borrowed on 12th February 2009 and the construction was completed in 2011-12, within time. Also, the lender certifies such amount of interest. So we do have a certificate as well. So all 4 conditions are satisfied. Therefore, a higher limit of 2 lakh is applicable. That is the maximum ceiling. Here, the interest accrued on capital borrowed is 1,55,000. So we are going to compare 1,55,000 with the higher limit, which is 2 lakh, and we take whichever is less. So 1,55,000 will be given as deduction. As a result, income from house property, which is self-occupied for residential purposes, there is a negative income of 1,55,000 rupees. This is when the assessee is opting for old tax regime, or I would say existing tax regime, and we're not opting for new tax regime under section 115 back. So let us see here how the computation has been shown. GAV is nil, municipal tax is nil, since we write NAV nil, so as a result these 2 figures would be taken as nil. Statutory deduction nil, and the interest on borrowed capital is lower of the 2, that is 1,55,000 or 2 lakh. And thus income from house property is 1,55,000. Now, what if the assessee opts for new tax regime under section 115 back? So when this lower tax regime has been offered to the assessee, the individual assessee or the HUF assessee have the option to go for new tax regime under section 115 back. But certain incentives are withdrawn. One of the incentives which is withdrawn is the deduction on account of interest on borrowed capital for 1 or 2 self-occupied properties. Now, what does that mean? If we have to compute IFHP in case of the same example where Tarun owns this house property and we need to compute the value, no deduction will be available. So this deduction has been withdrawn under new tax regime under section 115 back. So we will write NAV nil, GAV municipal taxes nil, standard deductions under section 24, which is standard deduction. This was already nil, and even interest on borrowed capital is no more allowed in case the assessee opts for new tax regime under section 115 back. As a result, IFHP for a self-occupied property where new tax regime under section 115 back is opted for will be nil. New tax regime under section 115 back is having no impact on let out house property. So the tax treatment would remain same and the computation of a let out house property would remain same as we did in the previous video. But here, when we come to the self-occupied properties, we have to ensure that this provision or this deduction, which was available under the existing tax regime, has now been withdrawn in case the assessee goes in for the new tax regime. Another question, where Tanisha is a resident individual. She owns two residential house properties in Delhi, one at South Delhi and another at North Delhi. Both houses are self-occupied by her and her family for their residential purposes. So now in this question, she's claiming two residential house properties as self-occupied. These properties are neither let out nor put to any other use. She acquired both ready-to-move-in houses, so she acquired them by borrowing the capital from State Bank of India. She borrowed certain capital from State Bank of India and she acquired both the ready-to-move-in houses at both places, South Delhi and North Delhi. Tenure of the loan in all situations is 30 years. Determine the income from house property for Tanisha for the assessment year 21-22 using the following information on the assumption that the assessee does not opt for new tax regime under section 115 back. So South Delhi house property, North Delhi house property, different cases are given, case 1, 2, 3 and 4. Date of borrowing given, amount of interest computed for previous year 2021 given. So date of borrowing for North Delhi house and amount of interest computed for previous year 2021. Date of borrowing is 12th September 2009. So this has been borrowed after 1st April 1999. So higher limit of 2 lakh is applicable. We are assuming that all other conditions are met. So here 2 lakh will be allowed at the max. Here the date of borrowing is 24th October 2018. So amount of interest computed for previous year 2021. Here the maximum allowed will be 40,000. Since on same lines that the date of borrowing is falling after 1st April 1999. But when we are going to combine these two, if you remember when we read the conditions, interest up to rupees 2 lakh is deductible for two self-occupied properties together. So the maximum ceiling is 2 lakh rupees. However, the total here is becoming 2,40,000, but the limit of 2 lakh is set. Therefore, you would see that aggregate 2 lakh is deductible. Therefore, income from house property will be negative 2 lakh. In case number 2, the capital was borrowed before 1st April 1999 and the amount of interest is 1,70,000. Since the capital was borrowed prior to 1st April 1999, the lower limit of 30,000 is applicable. Therefore, it will become 30,000. Maximum 30,000 will be allowed. On the other hand, for North Delhi house, 1st April 2007 is the date and the amount of interest computed is 30,000. 2 lakh maximum can be allowed, so 30,000 full will be allowed. And the total is making it 60,000 rupees. So 30,000 for South Delhi and 30,000 for North Delhi. It will be 60,000 in total. Therefore, income from house property will be NAV, which is nil, minus interest on borrowed capital, which is 60,000. Therefore, negative 60,000 recorded here. Case 3, 23rd January 2014. This is after 1st April 1999. The amount maximum allowed can be 2 lakh rupees. 27,000 is within the limits. Therefore, 27,000 is allowed. 14th November 2008. This is the date after 1st April 1999. Maximum limit allowed is 2 lakh. And the total again will be taken as 2 lakh. Since the aggregate deduction allowed is 2 lakh rupees. So you would see that the income from house property is a negative income, that is NAV nil minus interest on borrowed capital, which is 2 lakh rupees, therefore negative 2 lakh rupees here. Case number 4. The date of borrowing is 17th October 1998, that is prior to 1st April 1999. So the limit is 30,000. 29,000 is within the limits, therefore 29,000 here. 30th August 1998 is the date of borrowing in case of North Delhi house property. The limit again, or the maximum ceiling, is 30,000 rupees. 20,000 is within the limits. But since both borrowings were done prior to 1st April 1999, these two limits, 29,000 and 20,000 together, would be subject to 30,000 rupees. So here we see 30,000 rupees. Interest deductible for 2 self-occupied properties under section 24. Therefore, income from house property is 30,000 rupees. Now we come to case 2, where the house property could not be occupied by the owner of the property throughout the previous year because of employment, etc. at some other place. Section 23(2)(b) will be applicable if the following conditions are satisfied. The assessee is the owner of 1 or 2 house properties and she couldn't occupy them for self-residence purposes because of her employment, business or profession located at some other place. She resides at that other place in a building not owned by her. Her own house property is neither let out nor used for any other purposes by her. For example, Miss Kanika has a property located in Delhi. She is the owner of a property in Delhi. And because of her profession or business, she has to go and reside in Calcutta. The assessee is the owner of 1 property or 2 house properties and she could not occupy them for self-residence because of her business. She resides at that other place in Calcutta in a building which is not owned by her. So she is residing in a rented accommodation there. Her own house property is neither let out nor used for any other purposes by her. So the property which is left vacant at Delhi, which could not be occupied for self-residential purposes, there the property is neither let out nor used for any other purpose. In such a situation, the benefit of NAV equal to nil will be given to the assessee. So NAV will go nil in that case. Let us look at this question. Mr. Anand, he is a resident individual. He owns a house property in Punjab. His job in a multinational company has brought him to Delhi, and he, along with his family, moves to Delhi where he stays in a rented accommodation. His house in Punjab remained unoccupied throughout the previous year and no other benefit was derived from it. The rent of a similar property in Punjab will be rupees 2,40,000 per annum. The municipal valuation is 2,10,000 and he has paid municipal taxes of 12,500. He had taken a loan in October 2018 for repairs of the property. So the maximum ceiling allowed is 30,000 since it is taken for repairs. And interest payable thereon is 15,000 rupees. What will be the income of the assessee from house property on the assumption that he does not opt for new tax regime under section 115 back. So computation of income from house property for Mr. Anand for the assessment year 21-22. As we say, this property was not occupied by him for his self-residential purposes and owing to his employment. So this property will be considered as self-occupied and NAV will be taken as nil. So we have GAV, municipal taxes, NAV. Since NAV is nil, GAV and municipal taxes would also be taken as nil, even if the question suggests that yes, the assessee has paid certain municipal taxes, no deduction will be allowed in respect of that. So we are ignoring the figure 12,500, which is on account of municipal taxes. After this, deductions under section 24. 24A is a standard or a statutory deduction at the rate 30% of NAV. Since NAV is nil, so 30% of NAV is also nil. And interest on borrowed capital with some maximum ceiling, since it is a self-occupied property, considered to be a self-occupied property. So the maximum ceiling allowed here is 30,000 rupees. Although the loan has been taken beyond the date 1st April 1999, loan was taken sometime in October 2018, but the purpose of taking loan was repairs of the property. Therefore, the maximum ceiling applicable here is 30,000 rupees. And the interest accrued is 15,000. Comparing it with 30,000, whichever is less is available as deduction. So IFHP is from such self-occupied property is negative 15,000 rupees. So we see through this table, as per section 23(2)(b), the annual value of the house at Punjab will be taken as nil. NAV is nil, first of all. Therefore, GAV is nil, municipal tax is nil. Deductions under section 24, statutory deduction nil. Interest on borrowed capital available to the extent of 15,000 rupees because this was the interest accrued during the year. Therefore, IFHP is negative to the extent of 15,000. What if the assessee opts for new tax regime under section 115 back here? As we stated that the deduction on account of interest on borrowed capital for 2 house properties, that deduction has been withdrawn under the new tax regime. Therefore, NAV will be taken as nil. GAV is nil. Municipal tax is nil. Standard deduction, which is deduction under section 24, subsection A, which is 30%, it's nil. And B, interest on borrowed capital. This has been withdrawn under new tax regime, therefore nil. And as a result, answer is nil. So, IFHP under new tax regime will be nil.